Thank you for joining me. I'm Alex, and today I want to talk to you about Facebook. And I know what you're thinking, that's not even a retail stock, but I think we're finally done with retail. So, Facebook, I think they have a website or something. They do have Oculus Rift. They do have Instagram or something. So they do a few different things, and what I think I'm most excited about is their cryptocurrency, because I think that they have a genuine advantage in the crypto business in that they already have Messenger and the ability to send money over Messenger. So cryptocurrencies would make that so much easier and not have to worry about currency exchanges and all that kind of thing. So I think that the cryptocurrency on its own could be a fairly big hit because of the push by Facebook. And I think that they might be able to push the cryptocurrency into the mainstream rather than just a thing that they have. So I think that the cryptocurrency could be successful independently of Facebook, and Facebook may be independently successful, independent of the cryptocurrency. I don't know. It's just a website. Anyway, so price is $181, up a 0.25%, which is about half of what the market was doing yesterday. A PE of over 30, which isn't great, but it's not terrible. As a value investor, you generally look for stocks in the 20 or below range. 30 is not terrible, though. There's, Beyond Meat was at 400 at some point, so not terrible. Definitely with the growth they're going through, PE of 30 is not bad. So dividend yield is nothing, and the payout ratio is 0. So that is shocking. So they don't pay a dividend. So for a dividend investor, you can just find another video right there. Revenue growth about 30%, over 30% actually. Earnings growth about 30%, which is surprising. You would think that for a company that can grow revenue without much capital expenditures, the earnings would grow faster than the revenue. But obviously, them growing in the same amounts or in the same percentages at the very least is obviously a great thing. Especially when the earnings are like $22 billion now. So that is quite significant. The total assets of $97 billion, total liabilities of $13 billion, and net tangible assets of $64 billion is an amazing balance sheet. So, to sum all that up, if you're looking for a dividend stock, this is obviously not the stock for you. They don't pay a dividend right now, and I don't see them paying a dividend anytime soon. I think that they're going to exhaust most growth potential with all the capital that they can throw at first. And I don't think they're quite there to where they can stop growing and start paying dividends as a way to pay back investors, rather than with the stock price just increasing way too much. So, as a dividend investor, look for something else. Obviously, as a value investor, I think that the safety of the investment is not quite there, especially with a PE of over 30. So as a value investor, and I define that loosely as what Benjamin Graham would, in that your primary objective is safety of principal. And I just don't think that Facebook is quite on the same level as, say, a Walmart or an Amazon or, one of the more traditional companies, AT&T, banking stocks, commodities, all that. So what Facebook does have going for them is that there have been way too many challengers to their business model and way too many people trying to kick them off the throne and make the new Facebook that disrupted the MySpace. So everyone is trying to make Facebook be the next MySpace. But even Google with Google Plus has not managed to dethrone Facebook. And I think that speaks to a safety that Facebook now enjoys, where people have stopped trying to be the new Facebook and kind of trying to be in a different segment with a social network. So I consider YouTube to be a social network, and Twitter is a social network, but they don't directly compete with Facebook. Now, Facebook is trying to compete with YouTube, and Facebook is trying to compete with Twitter, but the fundamentally different segments, I think, make all of them be able to exist in parallel and not really take market share from each other. So that's why I think Facebook as a social network is going to stay for the foreseeable future. I don't see any risk of a competitor emerging and destroying Facebook right now. My thoughts on Uber were, I could write a similar app in half an hour and kind of be a competitor to Uber, and the same is just not true for Facebook because they're way too big and complex right now, and in so many markets with so high market share that, as I said, even Google didn't manage to, compete, and Google just gave up and stopped their social network, which was never really popular. So for now, Facebook very safe, especially with Instagram being very safe, and Oculus actually has competitors, and I don't think that Oculus has any inherent advantage at this point over other competitors in terms of virtual reality headsets. There are so many others, and I don't think that Oculus is, there's risk factors there of Oculus being dethroned as the best and first option for people. Instagram has a competitor in Snapchat, or rather Snapchat has a competitor in Instagram, but I don't think that there's too much of a fight going on right now. Again, like Twitter versus Facebook, I don't think that Instagram versus Snapchat is really a fight. They're not really taking market share from each other. They're kind of both growing in parallel. Then there's WhatsApp. No real competitor there for some reason, because that would be the easiest one to disrupt. But Facebook itself, very safe. WhatsApp, fairly safe, but not really monetizable in the same way. And so Facebook is here to stay. Very excited about the cryptocurrency. Very excited about the balance sheet of Facebook. Not too excited about the PE. But with a growth of 30%, I think the PE makes sense. Because if they only grow 1 year at 30%, their PE would be at 20, which is a reasonable PE for a value stock. So most of these growth companies have PEs that are way off base. Like AMD, when I sold it, had like 130 or something. And they weren't growing even to the same rate as Facebook. So with that said, I think that if you think that Facebook can grow at these same levels for a significant future, then I think it's a good stock even for a value investor. For a growth investor, I think this is the stock for you. I think it's a very solid stock for a growth investor. The growth is pretty good. It's been pretty consistent. And the earnings growth is also pretty good and pretty consistent and probably going on for quite a while. So I think that for a growth investor, and I think this may be the first time I've said this, this may be a good stock for you, and you should be looking into it, doing your own research, and probably buying this. For a value investor, I think it might be. You need to decide if the PE is something that you can look over, especially with the growth that's going on. But the balance sheet is amazing. The safety IMHO is not quite there, but it's reasonably safe. So you need to weigh three things against each other. You need to weigh the PE and the safety of the principal versus the insane growth and the amazing balance sheet. And whether or not you come to the conclusion that you should be buying Facebook or not, that is up to you. But definitely look into it, but because I think it's an amazing stock, and I think you should definitely do your research and weigh the options. So that's it for today. Make sure to subscribe if you haven't already. I'm coming out with more videos every day before market open. I hope you have a successful day.